All right, everybody, let's get into it. So I've had two videos that have kind of picked up a little bit with regards to real estate, more specifically Cardone Capital and Fundrise, both of which platforms I love and use. And I've had people basically in the comment section asking me particularly which one I would choose. And like with anything, of course, everyone's going to want me to choose immediately Fundrise or Cardone Capital. But as you know, I do in Map Money fashion like to go into a little bit of the details as to why I might choose or why you should choose one or the other. Because obviously, with anything, there comes certain items, certain criteria, certain liquidity issues, or just what the potential of each individual investment opportunity should be. So, not specifically even talking about strictly Cardone Capital and Fundrise, but any investment in general, you should always understand what you're getting yourself into. Otherwise, you might cause yourself more headaches or problems down the road, and obviously be investing in something that you're saying, "Oh my God, I didn't know," right? So, first and foremost, I like to let people know specifically about what the products really are. So, Cardone Capital, when I first got invested, was like 3 or so years ago. It was a $5,000 minimum. Very few non-accredited investors could invest. It was very few and far between, and it was mostly now, or more until recently, for accredited investors only. So people that can prove that have $1 million or more to be able to invest in that. They've since changed their style. I think they've recently opened up non-accredited for $1,000 a unit, and I think that they're trying to go down more the real estate investment trust path. And so you have that lower cost of entry to do that. However, the thing that's nice about Fundrise is you can set it up to auto invest every single month. I don't think you could do that with Cardone Capital. That also being said, I don't necessarily know how long they're going to offer non-accredited funds, or if that's going to be something they continue to do from here on out. So no hits on that. I have about 15,000 invested into 5 specific investment properties that I had chosen. And I'll get a little bit more into that maybe in the future with respect to like what you're choosing to invest in. That'll probably be my next topic. But just keep that in mind, right? The thing that I enjoy a lot about Fundrise is I put about 150 or so bucks into it every single month, and you have it automatically coming out of your paycheck. You kind of just like a 401k or just like anything else maybe that you do in the stock market, just add it and consistently add every single month on a consistent basis. So I think the minimum is like 500 bucks to start an account, and you can then, I guess, do it relatively easily. The second thing I want to note about this is the liquidity. Cardone Capital, you put that money in, it's going to be very difficult for you to get your money out, if at all, unless they refinance the property or sell the property you're investing in. Fundrise is a little bit different. They give you an opportunity after like 90 days or so to get your money back, but with that, you're going to pay a discounted price because obviously they're going to wait for more money to come in so they could replace what you're selling with somebody else and kind of make that transaction. But you have to keep in mind when you're investing in these things, it's not like a real estate investment trust. They're actually taking that capital and investing it into the real estate that they're actually buying. So it's not like just a piece of paper going back and forth. You have to think like you would on a house or real estate as well. High transaction costs and very low liquidity. You have to find a buyer for that particular property. It's not like a stock market where there's consistent market makers and liquidity and all that. So kind of keep that in mind. Thirdly, I'd like to mention specifically about what you are investing in. Cardone Capital, when you're investing in these particular projects, you get to see, let's just say, a minute amount of different projects, 3, 4, maybe 5 properties that with every, let's just say, $1,000 of a unit that you're buying into, you can see which ones you're looking at. So specifically, when I put in my 5,000 or 15,000 into Cardone Equity Fund 5, I knew which 5 properties. I think actually at the time I only needed like 4 out of the 5 properties that I was getting invested into, and the 5th one kind of came later. But I actually was able to see one of the properties here in Sugar Land, Texas, that I was like, okay, this is actually a pretty cool opportunity. Let me look at it. I know Sugar Land has a very low apartment rate, low amount of apartments. So I thought that that would be a really good location. And then coupling that with some of the apartments in Florida that they have in Cardone Equity Fund 5. I was really ecstatic about it. But the thing that's nice about Fundrise is it's very much more diversified. So you can choose different ways that you would like to approach it. Not to say that Cardone Capital you can't. You can invest in some commercial properties or whatever, but I think he's mostly focusing on multifamily homes. Whereas if you were to be investing in something like a Fundrise, you'd be actually looking at what you could be getting for, let's just say, multifamily homes, or buying into debt, or buying into commercial properties throughout. And you kind of have an idea as to, do you want to be East Coast? Do you want to be Heartland? Do you want to be West Coast? So they provide that sort of ability for you to understand where in the cycle that you might be potentially buying into, or not cycle, but where into the market you're potentially buying into, and allows you to kind of do it on a multitude of basis, or spread it amongst different sort of paths, right? Maybe you want to do East Coast and West Coast in the past, but now they kind of have it under one kind of structure, which I anticipate they'll also maybe roll into, I guess, a public real estate investment trust for people to buy and sell out of in the future as well. But it gives people an opportunity to buy debt, or construction loans, or new construction, or commercial, whereas you don't really get that with Cardone Capital. But that also being said, when there's so many properties that when you invest in some of these funds, most of the time you don't have the opportunity. But the cool thing that I do like that they do is they consistently update you pretty good about new properties that are entering and exiting the portfolio in a particular thing. So say they sold a $10 million group of properties, they'll give you that update. They'll give you the idea of what the return was, what the return expectations were when they got into it. They'll show you if they're above and below. So it gives you that opportunity, and it kind of allows you to understand how you're building over time. Cardone Capital, I think, is for some more advanced people, and I think that there's going to be a lot of opportunities for future growth with that. So I'm not saying that Fundrise isn't going to be able to grow either, but I think the portfolio is a little bit smaller with Cardone Capital, and so they have the ability to do more renovations to the properties, and they're more so looking at doing refinancing over the course of the 5-10 years, so get your money out and be able to still own the properties, with the ability to continue to own the properties and get, say, some checks back into the mail. Whereas Fundrise doesn't really do that. They don't really do the creative financing aspect of things. So wanted to highlight that piece of it as a whole. So for me, I'm going to continue to do both. But I think for the smaller investor, for the people that are more concerned about liquidity, for the people that I'd say are more average investors, I would say Fundrise is, excuse me, I would say Fundrise is more likely to be up your alley, just based off the fact that you have the ability to get your money back if you need it. You can do smaller increments, $50 a month or what have you. Another thing I guess I should mention, Fundrise pays quarterly dividends. My Cardone Capital pays me monthly. So on the 15th of every month, I wake up, I get a direct deposit into my checking. But the thing is I can't just be like, hey, let me reinvest all of my dividends or capital cash flow that I get back from Cardone Capital back into it, right? It's not like that. Whereas Fundrise, you can do that. It's a pool where they're consistently buying properties all the time. Not to say Cardone isn't, but it's a different sort of platform or a different mechanism. So Fundrise, you have that ability to reinvest all your dividends, whereas Cardone Capital, you kind of have to do it on lump sums. Maybe if you had a way bigger portfolio, it might be something you'd be able to work out with him, but it's not like you have access to, say, hundreds of millions of people that are investing into your properties, like, say, Fundrise does. I think it's still kind of a niche product that Cardone has, but it's getting bigger. And so with that, I think they're updating their UI. They're making it easier for the smaller retail investor to potentially invest. But for those of you that are just starting to get involved, I think Fundrise is a really easy way to do it. And I think the user interface is really nice. They have some good tools. And I think that you can learn a lot on their website, whereas Cardone Capital, not devaluing what they're doing at all, but you might learn a lot about project to project, where their expected internal rates of return will be, their cash flow, all that. but it might not necessarily be like a whole portfolio worth of projects that you would be getting at, say, Fundrise. So I wanted to take the opportunity to talk to you guys about that and give you guys my perspective. I've been I think investing with Fundrise now since the 2017 timeframe, so it's been about 5 years. Overall, it's like 11 grand. It's not a lot, but I still see that quarterly dividend payment kind of coming in. Cardone, it's been about 3 years, and I still see that dividend payment kind of coming in. It was $56 a month, then it got dropped down to 50. Now it's back up to $56 a month that I'm getting off of that. So it was about 4.5% a year in terms of total returns. But that being said, you get to see what the appraised value is at the end of the year. They give you the tax returns, and the value of the property gets kind of evaluated on a mark-to-market kind of a way to show you how much the properties have grown in price. And so you think about it in that respect, you see that immediately, and you can kind of keep track of that. So you can kind of understand what it's going to look like when they eventually do sell, and you kind of get your money back, and then whatever returns you get from that. So whatever money I do eventually get from that, I'm going to continue to invest in it. So if it does say go 15 to 30,000 with the next opportunity, I'll invest that next 30,000. I'm trying to grow that nest egg where I'm getting more income from different sources all over the place. So hopefully I'll be able to get a couple $100 a month coming from that, a couple $100 a month coming from Fundrise, which would come in quarterly, of course. So I'm up to $120 every 3 months on Fundrise, which is almost about the same as I'm getting from Cardone Capital. So they're returning about 4.5%, 5% each at the moment. One's is paying monthly, one's paying quarterly. And so I'm really just trying to get it to the point where I get enough where I could either sell, say, the Fundrise and be able to invest in my own property, or just keep it hands off and just keep putting money into Fundrise. And every time I do get a check or something like that coming from it, which I've seen in the past as they've merged things, then I'll continue to invest in both of them and hopefully just continue to get the cash flow coming in every couple months or so. So anyway, if you guys have any other questions, let me know. Maybe I'll make some TikToks about it if anybody's really curious, and answer some questions that way. But otherwise, ask some questions in the comment section. We could talk about it all day. But really hope that you guys enjoyed this video. Hopefully it brings you guys some insights and answers what you would prefer to do with your money, depending on what kind of situation you're in. But yeah, hopefully it gives you guys some insights. I'll talk to you guys soon. Have a good one.